Hello guys and welcome to ShortCryptology, where we talk about crypto-related topics and gaming. Today I will be trying a second version of my little course or like information lecture, where in the previous episode I tried to make a very quick one and it ended up being like 15 minutes or something. So this time I will be trying to accelerate everything and really make it the tiny little pill of knowledge that I plan to. What this is I pick one simple topic in technical analysis and I give the quickest but clearest possible explanation that I can come up with, so that you guys, especially people who have no knowledge of technical analysis, can try to get some view on how to trade, how to buy, when to buy and trade. In general, just how things work. You will still be making your own decisions. I just try to give you the basic knowledge on how things work and how to read a chart, what things are interesting or you should be seeing and reading from a chart, so that you can have a better chance of buying or selling at the right time if you're a daily trader, but still, even for a holder, maybe tell when you should get in or out of a trade in general. And also remember that, of course, I'm not a financial advisor, and this is all speculation and statistics. You never really know what will happen in a chart. You can only tell what is more likely to happen, and the better you are reading charts, the more likely you are to be right about it. But in the end, it's always a chance game, and all you can do is behave depending on what's most likely to happen, and hopefully overall you'll be making money, because you're always playing in whatever is more likely to happen. Now, today I just want to talk about support and resistance. Support and resistance are used a lot in trading and reading charts and finance in general, not only for crypto but for stock as well. And it's like a zone in the market or in the price action where there's likely to be a reversal. Like you can see in this picture, that in an uptrend, if you've seen my other video, you know what I'm talking about. Whenever you hit a new low and your trend reverses and you go back to growing in price instead of decreasing in price, that's where the support is. So every new higher low or every new low you create is considered a support. This doesn't mean that the previous support ceases to exist. You can have multiple levels of support, and some are stronger and some are weaker. If you just created a new support, as long as you don't go far away from that, maybe you have some sideways action just above the support, it's likely to break. It's a young support, it might be a weak support, but at least you can tell where the support is likely to be. And that's interesting because you can use it to decide when to buy. Like if you just created a new support and you're having a little bit of a side action above that support, maybe that's not the best moment to buy, because the value of the coin is still likely going down, or there's a good chance that it could happen. So you really don't want to buy when you're just creating a new support, especially if you're not at the support yet. In general, buying close to support is a good idea, but not if the support is new. Let's say you create a new support, then you hit a resistance and you fall back down. Now that could be a good moment to buy, but let's see. First of all, we need to tell what a resistance is. In an uptrend, a resistance is just a new it's when you create a new higher high and you see a reversal. So like at the first higher high, you bounce off that resistance. there is a resistance there. That's why the price action reversed and you're falling back down. But then you create a new higher low, and there's probably going to be a support there. That's why the price reversed. And then you hit a new higher high, but the price reversed again. That's why there is likely to be a resistance there. And that's how it goes. And some people, daily traders and stuff, like to trade in these swings. Like, let's say that you know where the next resistance is, and you know where the previous support was. You see a reversal, well, that older resistance is now support, because there is a reversal, like a change. When you go above a resistance, when you break that resistance, you turn it into support. That support could be weak, so you could break it very shortly, but still there is some form of resistance, let's say, to the price going under it, so it's a support. And that means that daily traders could speculate on the idea that the price will bounce on a support and bounce on a resistance, meaning that you could be buying at the support level, one that has already been tested. Maybe you wait for the price to bounce off the support a little bit and start an uptrend, and that's when you buy. And then when the price is getting closer to that resistance before it bounces off, or if you want, you could even wait for it to show signs of bouncing off and sell. If that support and that resistance are, I don't know, 10% of the price away from each other, you can make 10% or 7% if you're not timing it perfectly off that trade without really risking too much. Maybe it's all statistics, so you're always risking, but that's a way of selling. Now let's use somebody else's words for a second to help me. Okay, support. Support as the buying actual or potential sufficient in demand to halt a downtrend in prices for an appreciable period, and it possibly reverse it. Start pricing moving up again, fair price for buyers and risk reward is more. Honestly, that's not my kind of English, but yeah. What you can see is that support is usually not a precise price point, but a range, and that's important. Same for resistance. And that, as you can see, tends to create a price reversal. Supports and resistance can be broken. That's how downtrends or uptrends are created. But oftentimes, support and resistance can create like a side trend, or simply have the coin bounce off them for a little bit before breaking up or down. There's more indicators to tell that kind of behavior. For now, all we know is that there is this resistance and support duality. Now, resistance as the selling or actual or potential insufficient supply to keep prices from rising for a time and possibly turn back its uptrend. Fair price for sellers and risk to reward is more. Meaning that generally where there is a resistance, there is a good selling pressure. Like, people are trying to take profit at that point. And again, it's a range, not a specific price, as you can see. But what this does is create a barrier, a wall that bulls need to break, pretty much. People need to be buying at that level for the price to rise further. If the selling pressure is above the buying pressure, price will fall. And usually that resistance is strong where there's a lot of people that maybe bought much lower in price, or there's people who believe that the price won't be stable above that price level, and so they want to take profit before it falls. There's many things that could happen to make the price fall, but in general that's the kind of idea for the resistance. And here that's just the third thing that I mentioned about resistance and support. Resistance and support are simply the one thing and the same. Once a support is broken, it becomes resistance. Once the resistance is broken, it becomes support. meaning that people are likely to see some action at those levels more than others, and reversals are likely to happen at those price points, or ranges I should say. I hope that this video was better than the previous one. I hope that you liked it, and I was still likely quite longer than I wanted to be, but I'm trying my best. Please let me know in the comments how you want this like little lectures to be, what you want to see, what you want me to improve. I will surely listen and try my best. Thank you for watching.